Hey traders, Raghee here, and in this Simpler Futures recap video, I'm going to go over the three markets that we talked about in yesterday's update. So if you didn't get a chance to check that out, that might be a great thing to do after you catch this video right now. So starting off with gold, a couple things here. You can see here, this is the DC chucklehead trade. That's what I'm calling it. Anytime we've got any kind of political gridlock, any kind of shenanigans emanating from the nation's capital, we're going to see the US dollar take it on the chin. And in those specific scenarios, when the US dollar weakness is really being driven by the political uncertainty that, of course, then just sort of echoes into the economic uncertainty. You know, if this number one agenda of the healthcare reform can't get through, what does that mean for any of the other agendas for this administration? So that's where the dollar would start to sell off. So you take it back to gold. If this were US dollar weakness driven by euro strength, which, you know, most currency traders know, euro strength, absolutely US dollar weakness. That's how those two currencies tip the scales. But since this is more a concern, gold is going to rally. Now, gold had a pretty good rally here, pushing the upper end of price movement range. I feel pretty good about the exhaustion up here. Realize that 1235 is the lower, more aggressive end. Most of our traders got the fill at 1240. Looking at typical price movement ranges to determine which of the entries is more suited for your risk tolerance is a big part of what we do at Simpler Futures. So that's part of what we factored into how you would individually weight whether or not 1235 is for you or 1240. But nonetheless, trade is triggered. You can see the stop. And I'm giving you some insight into an open trade that we've got right now. Next up, and these were all follow-throughs from yesterday's setups. So here we have wheat. Now, if you didn't catch wheat today and take that quick ride to the upside, then you've got another shot at it. Now, I say quick ride to the upside because if you take a look at the daily price movement ranges, the price movement ranges that I'm talking about, gang, are not like average true range. Average true range is a fantastic tool that can be used in other ways, but what I'm talking about is using the 68% probability for what a market will do in terms of average to high price movement ranges, and using that to understand what every day could plot, not in terms of direction, but in terms of actual high to low. So as soon as you get a low put in and you add in the daily price movement range, you can automatically project a range extreme high with a very high degree of probability. So that also allows you to do what? Understand where stop losses should be placed. Understand where, in this case, profit targets should be placed. And we can do this hourly and daily, and it's a big part of what we do in the chat room every day. So this is a live trade, and then we've got beans. Now, beans and bean meal are doing the same thing. Beans has already bounced off this level. Bean meal has also done something very similar. So beans and bean meal have jumped off these levels. And I believe they still are valid levels to buy from, but wheat is still sitting at that level, and gold is right around that entry zone as well. So just a quick update to bring you up to speed on what we're watching. A little bit of a look ahead here briefly, and that is to look at the economic calendar. And there we go. Taking a look at the Wednesday calendar, notice we have crude oil inventories. Now, one of the plays that we've got active right now is the short in crude. Now, this short was one that we have as an overbought fade that also triggered another short in OIH. So don't underestimate where some of the stocks and ETFs can line up with these commodities. So we have a nice short in crude, pretty decent cushion going into tomorrow's crude oil inventories. And then the other part of what we do here at Simpler Futures is a pretty heavy emphasis on Forex. I've been trading Forex for about 18 years now. So one of the things we've got is a very active side of our spreadsheet with a number of Aussie trades. So keep in mind, Aussie US and Aussie Yen, as well as Aussie versus New Zealand, are all in play tomorrow for that Aussie hot zone. And you could play this as well on the AD futures. We're going to be looking a little bit on a longer term intraday time frame so we could take advantage of that shock absorption. We're going to pinpoint that entry with that price movement range exhaustion calculation that we do. You can leave that limit order out there and either the market comes to you or it doesn't, but we will make the market come to us and we'll increase the likelihood that we're within striking distance with that price movement range. So we'll do a lot of that tomorrow in the chat, and I'll talk about it a bit in the premium video. I'll see you in the next update.